Well, as we head into November, rates are on the rise again. Maybe not what you expected after the Fed's cuts in September. Also, the election happening. We're going to talk about all this. What's going on in November? What is Bill watching over across country? That's all coming up now. Hello, welcome in. This is the Smart Mortgage Show. I am Ben George. He is Bill Litton at Cross Country Mortgage. You can find him online at smartmortgageshow.com. Bill, happy to talk to you in November. I know we've got a lot going on right now with the election. I don't know, people listening to this is going to come out right around the time of the election, so it's going to be probably pretty crazy. Are you expecting craziness just in your world, or do you think the mortgage industry is maybe a little bit secluded from what's happening?
Well, there's always been a question of, do elections affect interest rates? So not only I think do they affect the rates in the short term, not so much in the long term. I mean, the election itself does not set long-term rates, but in the short term, I mean, in the last month, rates have increased almost 1%. And just to give you a little perspective, interest rates started to decrease in April of 2024, and they decreased all the way down until roughly September 18th, 2024, where they got down to about 6%. And that was right on the day of the Fed meeting when the Fed decreased their key interest rate by 0.5%. So although we didn't think there was going to be a big move that day because the market had already built it in, we did think it would signal just further decreases. And maybe if we took 5 steps down in rate, maybe we take 1 step up. It's usually not exactly linear. It's kind of like 3 steps forward, 1 step backwards. But what actually has happened is since September 18th, due to a few different factors, rates are back up closer to 7%, which is a dramatic reversal, something we did not expect. And we do think the election certainly has something has played into this for sure.
Well, you mentioned some factors have caused this, uptick a little bit. Are there anything specific that has been the main cause here?
So look, as far as the election is concerned, I feel like there are certain, and when I say investors, it's not me and you buying stocks or bonds. It's institutional investors. And sometimes in a period of uncertainty, this is a very close race. In a period of uncertainty, a lot of money gets sidelined. And when money gets sidelined and investors are not buying bonds, that causes the interest rate on the bonds to go up, so that they can be made more attractive to bring in more buyers. So we definitely think that that's part of the equation. And Ben, kind of like everything else in life, it's usually not just one thing. In this case, we don't think it's just one thing. The other piece of the puzzle is the economy is still chugging along. So there's a fear of inflation, and job numbers keep coming back better than expected. And that is a sign that the economy's hot, and therefore there could be some inflationary concerns.
Yeah, it's almost like the economy doesn't want to commit one way or the other, right? It's felt like that for a couple of years now. There's been indications of things going both directions, and we just been kind of going back and forth, like a little bit of a seesaw, it seems like. And I know with the election, the thing that I hear a lot is, the election won't matter, especially financially, right? Specifically financially speaking, is because the market just continues to chug along. And you look at past results of elections, it doesn't really impact how the market reacts, right? The performance of the market doesn't really matter who's in office. I'm curious if the same thing holds true for mortgage rates. I mean, does it kind of act similarly, where it doesn't truly matter who's in office, so to speak, because the rates continue just to do what they're going to do?
Yeah, I believe that. I've seen all different, we read a lot about this. We subscribe to a lot of different advisory services, and there's different opinions and different thoughts. And, there's some studies that say during Democratic presidencies that rates are lower or higher, and then some make cases for the opposite with Republican. But, the Federal Reserve is nonpartisan, and they are not to be influenced. And can we say with 100% certainty that they're not? No, but largely they're not. So I think a lot of it has to do with, where the economy is, where the market is, where the inflation is. Look, you could blame inflation on our latest administration, but COVID caused us to put $6 trillion into the system, which is very inflationary. And I think either party would have been dealing with that issue, right? So that was a COVID issue. I don't think it was a political issue as much. So I think in the longer term, it's more, as you've said, about market condition than it is about a specific party in office.
I do think it's interesting though, and maybe this is something we can explore down the road a little bit more, Bill, when things settle and depending on who gets elected. We're recording this before the election, clearly, so we don't know who that winner will be. But I do think there is more conversation, though, from candidates about home buying because of the cost of homes going up. And you see this more institutional buying across the board that I think will be interesting. And then, of course, we've seen the talk about Kamala's idea of giving $25,000 a credit, I think, to first-time home buyers. So there is some things that could potentially impact you, I guess, directly, depending on kind of how this shakes up. Who knows whether or not any of that will come to fruition eventually down the road if it does happen. But it is interesting to kind of track because it seems like there's more and more talk about home buying.
Yeah. And I think that, look, housing's our largest industry in the country, and housing's a basic need of shelter. So it's very important to our, government as a whole and the Federal Reserve. So they're definitely going to take different approaches to support housing, whether it's a $25,000 credit for a first-time home buyer, which that has been mentioned by the Harris administration. I think that the Trump administration probably looks more to favor, how do we get builders to build more? How do we incentivize businesses to go and build more homes, which then would positively affect, because we're very short of inventory. So they're going to have different angles on how to attack it. It will have an effect. But again, how does it affect interest rates overall? That's hard to say and hard to correlate.
All right. Anything you're watching, Bill, these final 2 months this year? Anything on your radar for 2024, or is it more looking ahead to the next year?
Yeah, no. So we are looking at how do we get through the last 2 months of the year with anybody that we're working with and position them best interest rate wise. There is a jobs number that comes out on this Friday, November 1st. We're going to be looking closely at that because it could be a market mover. We are hopeful that we're at the end of a run up on rates. By the way, October in the past 2 years has been the worst month for rates, both in 2022 and 2023. So there might be some seasonality there, and we're hoping that we see a reversal. There's a really good sense that we should see some better rates in November. We're going to be watching it closely, and we're not going to be reactionary to it. We are going to actively try and put you in the best position by locking when appropriate.
All right, very good. If you are in the market for a new home, thinking about purchasing one soon or considering refinancing maybe here at the end of the year, or it's on your radar for 2025, the best thing to do is start with a free 15-minute mortgage and loan consultation with Cross Country Mortgage. You can always text the word LEND to 21,000 to get on Bill's schedule. Again, it's just a very simple process and a very kind of exploratory, get information from you, kind of get your better sense of your full picture, and then obviously kind of help point you in the right direction moving forward. I know a lot to talk about, a lot to watch over this next month. And I know, Bill, Pennsylvania, big key state in this election. So I'm sure you're getting served plenty of ads where you are.
Plenty of ads. There's signs all over the place. In fact, Elon Musk was literally just up the road from where I live at a high school giving a speech the other day. Really? It's a key battleground, and there's been a lot of activity.
Well, very good. Well, no matter what the results are, we'll have some, I guess, probably some breakdown in a future episode about maybe some changes that could come, any impact it might have, but of course, we'll be watching rates as we move forward. Stay tuned for the market update in December. Also, please subscribe to the show wherever you listen and get in touch with Cross Country Mortgage. You can find us online, smartmortgageshow.com. This program is for informational purposes only. Please consult a qualified professional before taking any action. Bill Litton is a loan advisor and regional president with Cross Country Mortgage, NMLS number 147060.